Right, so let's look at the next set of threats here. Self-review. I guess it does kind of very much is what is going on here. There is the potential for us to prepare work and then to validate that work by carrying out an audit on it, and you can see where the issues would be, where the independence, the threat to independence would therefore be, because how can you review, how would you argue that you can review work that you yourself carried out? And again, but like I say, because in reality we have many organizations that are not listed, and so clients typically would want one organization or one firm to do all their work for them, and firms do have the capability to do a range of services. So the principle is very much about safeguarding. So if you're non-listed, you can provide with accounting and bookkeeping services, including payroll, that routine type, non-strategic decision-making type of work, if you like. But you must have very clear separate teams. And the key point here is that we're pretty much doing routine work. Management decisions must not be made by the firm, and the if you like, everything must be approved by the client. So if you're going to be doing anything for the client, that's the case. But once you're listed, you simply cannot provide a listed audit client with accounting and bookkeeping services. You can provide accounting services for divisions if separate teams are used, if you like. So if you and if they're immaterial to the division, so things like tax services or other sort of payroll sort of things. But in terms of the fundamental day-to-day accounting bookkeeping, just cannot be provided. Now, in terms of internal audit, now again, like I say, part of our work, of course, fundamentally is a test of control and a test of data. Right, so we have a problem here if you are providing the if you're providing the controls and putting the controls in place and then examining the controls. That's just not, that doesn't make much for independence. So you cannot provide internal audit services for a listed audit client where the service relates to internal controls. And again, we really shouldn't be doing this. You just cannot. And where services provided, separate audit teams must be used. So again, you can see really the issue here is, especially for listed clients, that's something we just don't want to be doing. So for your non-listed clients, it's probable that you will have a tax partner in the firm who can still manage and do the work, and a tax team, and that's fine actually. Tax calculations for inclusion in the financial statements create a self-review threat. Of course, completion of tax returns does not generally create a self-review, because typically you have a tax department, right, don't you, who would do their work. And you should have an audit department that will then look at that work. So we're really talking about two different departments. So where an audit team member performs a tax calculation, the work should be reviewed by a senior partner. So I just correct myself there when I talked about listed firms. When it comes to tax in particular, a firm cannot prepare tax calculations for a listed audit client. So you can't do the audit, you can't do the tax either. And typically, so really the truth is we don't want to be doing, I mean, definitely for listed firms, we can't do these things. And even, ultimately, for non-listed firms, just in general, this is a separate area, really, a separate part of the separate function. So the firm should not be providing tax advice that depends on that is material. You see, that's the word there. We shouldn't, well, really all a matter of judgment. Um, and other tax advice is allowable with safeguards. So you can see, if I feel like we're contradicting each other, contradicting ourselves somewhat, saying you can't and you can. The question here is if you can have very good departments. It says should not, right? Should not. So ultimately, your thinking is about shouldn't, but it's not the end of the world if you have very good safeguards in place. Again, if you can design and implement IT systems unrelated to internal controls, so as long as it's not related to internal controls, implementation of off-the-shelf accounting software, um, and making recommendations on a system design or system or system designed or operated by another service provider or by the entity. So you can see that there are issues here. So ultimately, if it's to do with internal controls, we don't want to be doing that, if you like. But if it's not, well, it is work. Evaluation. So typically, where you have sometimes you'll be called in and they'll request, to do some corporate finance work or some due diligence work or some insolvency work. Um, but typically, if the threat is deemed not to be significant, as long as you have a different department, really, then that's okay for non-listed clients. Um, and for listed clients, if it's material to the financial statements, it just should not be provided to the listed audit client. Temporary staff assignments. I've been on one of these before where routine work is required, and so you're sent out to do the work. And if the loan period is short, no management responsibilities. You're just carrying out the work, and you can't be on the same audit. You can't be on the audit especially if you've been loaned out to the area. So you just can't be in the audit, but the client is still fundamentally responsible for directing and supervising the person. Um, I think I mentioned this earlier on. So, corporate finance services, self review, and advocacy threats may be created if the firm assists with developing these strategies, possible targets, disposal transactions, finance raising, structuring advice. So you can see here, these are all, you're just really opening yourself up for not being able to prove there has been, you are, and are seen to be independent. But if you have to, again, use professionals who are not members of the auditing 100% to perform the service. That's a fact. Um, then again, I think yes, I think we can go here. So this is about client staff joining the audit firm. So now you have people coming from the client to us. Again, now what we definitely don't want to be doing is putting them on the audit. That wouldn't make any sense. So we just don't want them on the audit. So such individuals should not be assigned to the audit, if they'll be evaluating elements of the financial statements which they had prepared accounting records. There's no point having someone who's just left the client to come and join us to go back to the client and then self-reviewing their own work. Um, so there we are. And then typically you couldn't have both. You can't have someone being a if you like, kind of representing both parties at the same time. We briefly talked about this question of advocacy. You cannot negotiate for the client for finance, represent them in court. Not really. That's not how it really works. So yeah, that kind of we have talked a lot about these. I think the next thing really is to jump into, and I discussed this um, in the earlier videos. So yes, here we are. Yes, I think I did. Ye- Um, So, I mean, this just really talks about some of the key areas that where you are permitted to disclose. So technically, I might have highlighted that in terms of confidentiality, you must keep the information confidential. But there are some things that you are required, if you like, by law to disclose, if you like. So this question of fraud and theft and money laundering, and I think I might have mentioned drugs and terrorism. So we have health and safety law, employment law, environmental offences. So these are the sorts of things that if you like. But here it says in order to may disclose information if they consider it to be in the public interest. There is no official definition, but you must have some judgment and legal think carefully about this. And if someone is likely to incur some physical or financial damage, and you know that by reporting it you will, or by not reporting it you would be allowing this to carry on. And so you want to think about it by speaking to the to the sort of higher members in the board members in this organization, get legal advice, and if you like, as long as it's made in the public interest, you will have protection. Great. And I talked earlier on about conflict of interest, with, if you like, remember the Ernst and Young case with Pepsi and Coca-Cola. So what I would like you to do, I will highlight it again, please, is to definitely do this test your understanding. It's important. We might as well jump into the questions because we could spend all day looking at the actual issues, but going into the questions and doing them will allow us actually analyze and see how practical, um, how it practically works in terms of managing some of those issues. So great stuff. And that technically is the end of the part of part one. I carry on actually of part one.